Good afternoon and welcome to the Traders Group. This is your host, Gary Humeski. It is Monday, February the 16th, a little after 4 p.m. Eastern Time. I want to welcome anybody new on board as well as the members that have been here for a while and sticking with this and learning and making money. Let's go ahead and get right to the disclaimer real quick. This webinar is for educational purposes only. I am not a licensed representative or giving any kind of trading advice. This is strictly for educational purposes. Okay. One of our members asked a question about Apple and would it hit 125 by April? Now it's about 127. What now? Good question, Bob. Actually, on a 10-year monthly, if you do a Fibonacci extension on that, the first resistance level is 129.47, I believe. I will double check. Actually, the next one was 141 that I'm seeing here. I'm pretty sure I did this on a 10-year monthly. But this was a few days ago. Oh, you know, maybe, hold on. I did another setting. So let me try that. There it is. There it is. 130. Can you see that, everybody? It surpassed the 138.2 extension. The next one, and that's a big one, is the 161.8 percentile of its extension from its run up here in December to the I guess we'd call it September of 2012, and then back down to June of 13. So based on that movement, the extension would mean the next resistance level is 130. Okay? There's nothing in between here, folks. No, that's a little bit too much. If I got rid of this 200, this would probably shoot down a little bit, but there it is right there, if everybody can see that. Okay? Okay, hopefully that answers your question, Bob. All right, let's get right into the macro picture first, see what's going on with all the indices. And everything I see, now this is the Dow Jones on the left, this is the S&P in the middle, and the NASDAQ on the right. Everything is very bullish right now, folks. Very, very bullish. Wide open gator mouth on both MOBOs. There's a David Elliott tweaked. Bollinger Bands, the DPO, the detrending price oscillator is above the band, all indicative. You can even see the alligator mouth here. All indicative of us still staying in a bullish market. Even the whole moving average that normally reacts a little bit quicker than the breakouts. You can see it changed color here. It changed color here before there was a breakout. But what we have reached is a couple of new highs on the S&P and the NASDAQ. One of the things that has to happen, though, and this will be a telltale sign early next week, is this has to maintain. Okay, and if it pulls back, then we're starting to look for a correction, of which I spoke about last time. That is typically and historically what happens in the market on all indices from a best choice seasonal standpoint. Asterisk DJI This is the area February to March. 61% probability that it goes down on the Dow. Let's use best rating a whole zone instead. 69% probability from the middle of February to the beginning of March. Same thing with the S&P 500. 71% probability in the last 14 years. Again, middle of February, beginning of March. I got to put the asterisk in first. %80 probability on the NASDAQ. Okay, so we have a historical precedent that all three indices go down, yet from a technical perspective, everything is still extremely positive. You do notice that we have peaked and hit a 38.2% extension on the S&P. We have broken the 50% extension. So these would potentially be the next targets. 2128 on the NASDAQ, breaking 2100. 4891 on the NASDAQ, I'm sorry, 4972, and then we would set a new high on the Dow at 18161. And that's kind of evidenced also in the VIX. You see the VIX pulling down? There is nothing stopping it from continuing down all the way to its one-year low. You could say, well, the last 6-month low was 1124, so it could potentially, that you could consider to be the rock bottom. But as you can see, there's nothing in between the 23.6 and the zero starting point. And the same thing with the SPYs. The spider on the S&P 500, there's nothing between the 78.6 retracement all the way to its high. So there's nothing blocking it. Again, everything is wide open. So from a technical perspective, everything looks extremely rosy. But let's see what happens next week. All right, let's go to the, oops, I got to start reading the messages here, sorry. Mine doesn't look like yours. Okay, well, we can do a quick team viewer, Bob, and I'll see what your looks like. I think you're talking about the Apple chart. Tom says, with Apple, BCS is showing dip with price at top of chart, which way would we play? Okay, so we're all really talking about Apple because Apple's been rip-roaring here, and I love to trade Apple. I trade at both calls on the weeklies, basically, though, and make my money in 2-3 days. Sometimes I'll buy a little bit longer. Let's see what we see here. Okay, first thing that jumps out to me is this right here. See, there's no blue lines in the background at all. Then all of a sudden you got this thing sticking out right in the middle, which if you go to 2015, that's where we're at. So it has just been rip roaring to about 95-96% of its historical, from the lowest it's been to the highest it's been, overlaid on this chart. You can see there's a composite kind of peak, looks like a little mountain, and then comes down. I don't know if I'm going to be able to pick up any short on that with best rating. You see the longs, but that's basically today. The next long that you see is in March. So you ask yourself, well, what happens here? If you go to linear regression line, at least with best choice, we're sitting at a 96.4% extreme on a 6-month. You're going to find the same thing on a 1 year. We're sitting nearly at the top, 83.2. 2 year, we are way above the extreme lines at 95.6 on a 2 year. 3 month is the same thing, screaming overbought. So from a best choice standpoint, yeah, if you followed the rolling pattern, it's time for it to pull back. So let's go back to seasonal, change this to best profit per trade, click the download piece just to make sure that I've got accurate data looking at this chart, because sometimes you get corrupt data. I'm going to try to find that little part right in there. There it is, 70% probability that it pulls down. Not 100, not 80, but a pretty strong historical propensity. And you can kind of verify that by clicking on various years. There's 2014, where it ran up from the beginning of February. You can see the date here. peaked around the 18th and then pulled back. The 13th, same year, the 2013, same thing, pulled back around the 11th. This year just rock and rolled and busted right through, so that was a year that you couldn't short it. 2011, you see this peak. So in lieu of these types of historical price pattern movements, you would almost suggest to yourself, gosh, I'm going to be careful about playing Apple long right now. There may be a pullback before it runs up. And that's not untypical, folks, when you have something like, like this. Now, I want you guys to notice something here. I'm going to put this on a different chart. This is a 10-day hourly, a 6-month daily, and a 1-year weekly. 1-year weekly looks all positive, rock and roll. There's 129.98 on an extreme. You have 127 on a 6-month daily. But anybody know what that red candle is? Anybody want to type that in and see if people who follow candlesticks know what kind of candle that is? It's a hammer. A hammer at the top of a bull run when it's overbought, typically, even if you didn't have linear regression lines, indicates a reversal of trend, a trend reversal. You don't see that on the hourly. You see this part right here where it's just kind of gone sideways and it looks like it's ready to break out again. Again, Monday is going to be a real nice telltale sign. So without going too much into that, let's see what may affect this particular trade, or what could affect it this week from an economical standpoint. And that's the short term. Let's make sure that we are very aware of what's coming out from the government this week. These kind of days usually are very disruptive when the feds are talking. So Wednesday, 2 o'clock, feds are talking. Lots of other economic news coming out of the government. Housing starts to be pretty interesting. Jobless claims on Thursday, Philly Fed at 10 o'clock. Pretty much nothing on Friday, but this is the big one. Okay, so it may be kind of slow today to see what the feds are going to do. Are they possibly thinking about raising rates early? Are they going to make any allusion to, or are they going to allude to any time frame? A lot of people are wondering about that. One of the things I will say at this juncture too, from an economic standpoint, for some people that are smarter than me, a gentleman by the name of John Butters. Don says, hanging man thought hammers were at the bottom of a downtrend. Yes, well, that's an inverse hammer. This you could say is a hanging man, but it's also considered a hammer, because if I grabbed my hand right here, I could swing that hammer one way or the other. If this was reverse on the bottom, that would be an inverse hammer. So you do see hammers at the bottom of trend, at the end of a down run. I mean, it can be either or. It could be at the top of the trend or at the bottom of the trend. If this was at the bottom of this trend, in other words, if this was down here at the bottom of linear regression, this was showing as a hammer after a down run, but it was green, that would be indicative that that's the end of a run. But this signifies potentially, according to Japanese candlesticks, the trend reversal. So you were pretty much right on that as far as the hammer and the hanging man goes. They're one and the same. So be aware of FOMC. Earnings have been pretty good this season. We got Priceline coming up also on Thursday, which I am still bullish on. But one of the things we all know is energy has taken a nice seat for all of us as far as putting money in our pockets. Have we gone on the market and spent that? I don't know. According to John Butters from FactSet, energy earnings have declined. Now, one of the things that's interesting, he says, is forecasts for the first quarter are more negative than usual. So we're talking about first quarter here, which is going to be reflecting what happened over the fourth quarter in energy and retail and so forth and so on. Of the 74 S&P 500 companies that have issued forecasts, he says, 63 of the 74, or 85%, are forecasting earnings below the Wall Street estimates. The 5-year average Is only 68%. So what he is suggesting is that virtually every sector is expected to perform worse than it was estimated in 2014, citing energy as being that big factor. So that's from a guy by the name of John Butters from FactSet. So that's interesting information to be aware of. Okay, keeping conscious of time. I'm still bullish on Priceline. You're welcome, Tom. I'm still very bullish on Priceline. Make sure I've got good data. Historical perspective still says I have 100% probability with an 11.64% average move. So if I go to trade and type in Priceline, the MMM market maker move is $49. February expiration, which is the one right around the corner, right? This week, this Friday. Earnings are coming out this Thursday. They're expecting a $54 move based on a 54% implied volatility. If I go to my charts and look at what the percentage is of Priceline, as far as their rank, it's not that bad, folks, right? It's not that bad. Now, we have a new gentleman that's joining us today, and I've known him for quite a number of years. I don't know, is Sandy on board? I don't know if he's here today or not. No, I don't see him. Anyways, he has lived and breathed Elliott Wave for 22 years. And we had talked about it over the weekend, and he pointed out some very, very interesting things. It's a chart I want to show you. Anyways, first of all, the IV ranking, it's only at the 40.86 percentile of its historical last year IV, which is pretty low, folks. And again, we're looking at about a $49 move, which would put a target of, I did this yesterday, but no price movement today, so this all should be accurate information. I had a best choice software target based on an 11.64% move of 1158. I'm sorry, 1178. 1178. The IV plus target is 1158, and the MMM is 1149. So if you take the low to the high and you look at the mid-range, I like the 1160s as far as a directional call on Febs. Also on a bull call, I did the 1165, 1170s. And interesting, for a bull call, you get this costs you $1. See the NAT is at $1, which is more than likely what you're going to get. You're going to get the natural rather than the mid. I mean, you can always put in a limit order to see if you can get filled. But I put on $1 for the NAT for a bull call. It's pretty cheap, right, for a $5 spread. That means you could make potentially $4 or 300% on your money, which is good. And ironically, when I did for the bull put, I did the 1050, 1045s. And I believe 1050 is far enough away from at the money that even if it moves $50, that puts me at 1053, 1054. So if I bought that, sold that and bought that, there's another $1 credit. Isn't that ironic, guys? $1 for the bull put and $1 credit for or bull call and $1 credit for the bull put. So that's what I like, the 1050, 1045s for the bull put. Going back to this chart, going back to something with a little bit longer term. One of the things that he did is he drew in a pattern. Let me show you that. I've got it. I saved it. open with, let's do photo gallery. Interesting chart, okay? He's got a lot of other things, ADX. You can see ADX down here, stochastics, ATR, average true range, MACD. He's got the default 1226. And then he's got the RSI up here. It's a nice charting system, but this is interesting. He's a student of Elliott Wave. And this is what's called a bullish consolidation pattern. The same thing happened last year in a 20-day track record, and Priceline went up $375. As he says, it is finishing his, the primary first wave is just starting. It's finished a cycle already, A, B, C, D, E, and it's just starting a new one. After a bullish consolidation pattern, he feels a target of 1250 to 1350 by mid-March. Right here. So interesting stuff. Very, very interesting stuff. He's very, very bullish on this. And again, he's a little bit longer-term investor, mind you. But this is important to know. And he's going to be kind of contributing this stuff, you know, to help us all out. If anybody's interested in this chart, I'll be glad to email it to them afterwards. Just after the session, just email it to me. So that's Priceline. Let's I've only got about two more as far as longs. IMAX Corporation came out as a long. I ran a list. Hold on. Where is it? Earnings. Where is it? Earnings. Where's my earnings cycle? 126, 21. That's it. There it is. IMAX. Um, 93.3% probably. Not a big mover, folks. But, you know, when I see this kind of thing historically, the first thing that comes to me is, okay, it's got some historical precedence. Great. Is there any action on this? Is there anybody, you know, buying any options? If it's not even worth me analyzing. I'm not going to go to the fundamentals. I'm not going to go to the analyst. I mean, if I see a great historical potential move, the first thing in question comes to my mind, is there any open interest? Is there any kind of excitement in trading this? And there's 3,083 open interest at the 35s, which is 6 cents away. If you go to March, there's 31,000 open interest at the 35s, and somebody did a $2 spread right there, probably came in and bought 30,000 contracts. Cost them $1.20. 1.20 times 30,000. So they spent $36,000. No. Yeah, that's right. 1.20 times 100. No, I'm sorry. It's $120 times 30,000. Oh, they spent $3.6 million. There's a little bit more there. So anyways, I like that. When I saw this kind of open interest and excitement, that definitely told me some people are loading up. And I don't see any short interest at all. Oh, there's another member on board. Is Dave or Mark? Are you here today? Yeah, Mark's here today. He's another new member, and he's going to be contributing as well. He's been trading for a long time, up and down, just like a lot of us. And one of the things he's done is he's looking at a service. I think I told you guys about this. As a matter of fact, I maybe even mentioned one of the trades a week ago today, WBA, which was actually a very good trade. It's like the Nigerian brothers in Monster Options. They used to have this. It was a service. They provided about 12 to 15 alerts per day based on unusual volume that was, order flow that was coming in. And they wrote evidently some algorithms to be able to take advantage of that. So these are things that I used to do without it. I mean, it takes a lot of time and effort, folks. I mean, to be able to siphon through and look at it, all of a sudden have this kind of thing jump out at you. One of the ones, Mark, if you don't mind, I'm going to mention 3.6 million. Yeah, thank you, Robert. My math was all off. One of the ones was Pilgrims, PPC, and I said, well, let me take a look at that. Again, first thing I'm looking at is there any bearish interest versus all the bullish interest? A lot of bullish interest. Now, this is not a historical precedent. And you can also see on the one, well, this is, I don't know what the US 577 is. This is not a weekly. Must be at a different stock price. Maybe they had a stock split or something. But a lot of people loading up here. So you guys may want to write that down, PPC. I didn't do any, I think I did some, I looked at Best Choice to see what it said. And it really didn't give me anything that was definitive that said, okay, there's a historical precedent for it to be bullish right now either. Well, 128 to 217. And it's consolidating at the bottom of the linear regression bands. I don't have a MAC. I have a MAC starting to curl over. But that's an interesting chart. If you just did regular Best Choice, it's sitting at the 18.1 extreme. Oh, I did some research. I guess I did some research on this. Oh, yeah, that's what I wanted to show you. See, for your edification, Mark, since you're here, when I looked at Best Choice, this looks great, but these are just a little bit past normal standard deviation. This looks great. Yeah, this is for a day trading trigger. Don't ever look at that and say, oh yeah, that's a trigger for me to get in. So to really refine my entrances or say, is it something, I have 3 triggers. John Person Pivot Study, Small Arrow, the David Elliott MOBO breakout, as well as a DPO MOBO breakout. So pretty strong stuff right there in regards to potentially a breakout on a stock with a lot of unusual order flow coming in. So write that down. I did not put it down on Don mentions March's at what strike? March open interest at 35, 16,000. You talking about this other Marches? This one here? Holy Toledo. Yeah, there you go. Thanks, Don. But I do have some bearish interest out here, too, which concerns me. Now, I don't know if that's people selling or if it's mine, but it does give me a concern when I see that. But that is very, very strong open interest at the 35s. Where if you look at, okay, where's the 35s? Where is that in far as its last 6 months Fibonacci retracement? Puts you right at the 78.6, the 35.39. So something to definitely look at, folks. So I did the IMAX. I put some bull calls and bull puts on. No bull calls or puts on IMAX, by the way. I didn't see anything worthwhile or worth the price. I mean, maybe you guys will find something I don't. Now, it really is a chart that kind of befuddled me when I looked and I said, well, what's a 2-year? It's a nice looking chart. Well, what's the earnings? 94.8, 95.8. Very, very consistent price and earnings. Company is making money and the price is growing according to its earnings schedule. They're nearly paralleling each other. So the company's obviously making money, and they're at the bottom of linear regression on a 2-year, same as a 1-year, sitting at the 4.0, 6-month. So a lot of good things about that. That was PPC. I'm sorry, I went to IMAX. IMAX was at the top. That's what I meant to say. This was a befuddling chart. There's no way to use linear regression as far as a potential target. This company is just continuing to fly. I mean, if you even look at a 5-year, well, 5 years is a little bit different. I guess you could use a 5-year. But again, if you're going to use this long of a term, you're not buying spot month. You're probably buying a calendar on something like that. Now, I don't know if the hopefully this didn't freeze this up. Okay, good. One of the things that Pete wrote in here is the annualized premium somebody is willing to pay, which is pretty interesting. And that's sitting at 200%. Whoa. PPC paid $5.77 dividend and then dropped. Interesting. I wonder why they did that. Anyways, that's interesting information. I don't know how I can use that, Bob. Maybe you can further elaborate on that. February spot month for 90 cents. That is actually a 200% annualized premium that somebody is paying for the at the money 35. So what if we went to January's? What would January cost? And what is the annualized? Well, it's pretty expensive, $4.30. So, but it's only 13% annualized. So maybe September, buy ourselves 6 months, $3.10, and it's only 15%. So you could potentially make the spread between, well, let's see what that would actually have cost us. So if we bought that September 35s and then we sold the Febs to get that premium, $1.98. $1.98 buys us into the September 35s when that's costing about $3.10. Now it does say the NAT is there, but I think if you when you're buying these kind of further out in time, you generally tend to get your limit price. You just have to put it in and let it sit there for a little bit. So even if you ended up paying $2, though, it's huge, guys. You're only paying 15% annualized on that. By the way, that's based on the ask price, so you folks know. This is based on the 90 cents. Somebody paid 90 cents. So that's huge. That's a 185% return on your money in 5 days. So anyways, that's interesting. Let's go to the last one I saw. I got to keep conscious of time. Sorry, I'm reminding myself of this. Anybody heard of Six Flags? You got earnings coming up. Pretty consistent. So first thing I said, not a lot of years. You only got 5 years worth of history. So you have to be a little bit cautious there. And so that 40 at the money jumped out. So I looked at some charts on this. And boy, it really popped easy, and it's just meandering and slowly moving itself upwards. You do have a positive DPO. Everything is positive. The green river of money, the red river of pain. So this is it's all positive here. You've got a 49 EMA above the 89. You have linear regression pointing up. It's above its 200, which is an IBD rule. And you have a historical precedent of it going up. Using best choices, you can see the same thing, sitting kind of at the middle with a gap. 1 year sitting at the top. 2 years sitting at the top. So companies evidently making some, let's see what they're as far as earnings. Well, earnings are not that great. They're coming down, at least according to this particular chart. So I put it down there. It was pretty inexpensive the way I saw it. And the IV, just nothing. The IV rank is 0. I mean, there's no volatility, so it wouldn't be one that you would sell vol or sell volatility, meaning sell, do a credit spread, selling out of the money calls to be able to collect the credit and let it expire and take advantage of the volatility. There's just none. So the 45s at $1.20 looked reasonable to me, so I listed that. There's no bull. A bull put. I did see that as well. I think I did the 45.40s. Yeah, 92-cent credit. And it's only a $3 potential move here. That only brings me down to about $42. About a $3 move here as well. Brings me down to $42. So it's not even close to the one I bought at 40. And again, it's spot month. March, I also saw that a lot of volume at the 40s. That's the other thing that intrigued me when I see this kind of large in-the-money volume. Now, I'm not going to pay these exorbitant prices. Now, one of the things I thought to myself is, maybe somebody's doing a calendar spread. So if I bought that and sold that, I went, oh, that's cheap, 35 cents. Okay, Mark, thank you. I appreciate that. So there you go. I didn't even list that. You guys want me to list that? That's a pretty doggone inexpensive calendar spread. Yes, no? Give me some feedback. Speak now, forever hold your peace. Come on, guys. Yes? Anybody else? Need a couple more people confirm. You want me to list that as a potential? I can do it. There's plenty of room here because I didn't find a bull call that was reasonably priced. $4.13 for a $5 spread. And I'm not going to go this far to the money to the 50. Plus, there's no open interest. I couldn't do a vertical even in May's, and it's $4.08. So I did not find any decently priced bull calls here for Monday or for the 6th. But again, I did find the bull put, and then I can list the. I'll go ahead and list the instead of a bull call, I'll put calendar. And what did we use? March, Feb, and we did the 40s, right? And that was for a whopping premium of 35 cents. Okay, it's listed. Some seasonals that are coming up. Again, remember all of this stuff, please be aware of all the things we talked about on the market perspective, right? I mean, there could be some retracement. We've had a nice run, folks, so we know the historical precedent. Haynes brand, HBI. Nice historical run, but again, I see that finger sticking way out here in zero blue, so I don't know if it needs to retrace first. So, be very, very aware of that. You see that little dipsy-do right here, pulls up, pulls down. Didn't do that really in 14, did it in 13, did it a little bit in March for 12, did it in 11, skyrocketed up in 10, and then it started later in 09, 08, did that little dipsy-do. So if I change this to best profit per trade, because I want to see what this run would be, and pretty strong historical Preston, even with a green rating of 4.9 of it running up. Somehow I had 100%. I don't know how. There it is. Starting a little bit later, so maybe be conscious of that. I don't know if this little part here is going to create a problem. No, see, that's still, historical precedent is still along from the middle of the month to the end of the month. So, but again, it's sitting way up here at the top of linear regression, 94.9. I need to do something here. I don't like this for some reason. I don't know why I have this 200 here. So as you see, it's 49's above the 89. Everything looks rock and rolling. You got a gator mouth here. Everything looks good, but I don't know if it needs to have that leashing effect. Remember I talked about that? That's what's used in the bond market for these 49.89 EMAs a lot. The price will meander away, come back, meander away, come back. You have this pattern, and now it's straight away a little bit. I can relate to this because I walk my Great Danes at night, and it's 300 pounds of animal, and sometimes I let them go out a little bit, but then I have to pull them and rein them in case there's another dog or an animal that they see, because they could literally yank my arm off. I've got to be real careful. They already snapped my ring finger on my left hand, and I literally heard it pop. I don't think I'll ever have it fixed, but anyways, so HBI. Charter, yeah, Charter. I looked at CH. That's another good one. Thanks for bringing that up, Mark. CHTR. That run is supposed to start, but it's had a really, just an incredible run is my concern. You can see that, right? From almost the 8% of its historical price movement all the way up to almost 95, 97%. I just think it's got to breathe a little bit. That's how the market goes. It inhales, exhales. But it is a historical precedent. It's absolutely correct. Make sure I've got good data. Highlight this area, and she lights up blue, and it's 100%. Nice percentage historical movement. So what you'd want to do when you see something like that, a lot of people have asked me this over the years and say, well, gosh, it's not oversold. Ideally, we would have got in here at the end of January. Yeah, hindsight's always 20/20, right? So if you're looking at something like that, I probably want to go to 2-year and drag my mouse off the chart and look at what is that high. And where is it sitting at right now? It closed at 177, so that's beyond the mid. The high is 189. What does that look like? What a beautiful run off that earnings, just exploded. I missed that one, guys. I don't know if anybody took advantage of it. Baidu for April call, I don't know, Jose. I'm a little bit negative on Baidu. Baidu, for some reason, missed its earnings. There was a write-up about it in Seeking Alpha that talked about how the ad share, the ad revenue, which is how Google and Baidu make their money, is evidently being shifted to mobile devices and competing companies. So, I think the consumer's kind of negative. Let me finish on this, and I'll go take a look at that Baidu, because it was a thought I had as well. It's one of the ones I had written down. Yeah, see here I got 191 on mine, if you guys can see this. Guys and gals, I'm sorry. So target, maybe 190, buying some time. See where the volume is. Well, we got a lot of in the money here in March at 155. I'm not going to pay $24. Very little here. That was one of my concerns with Charter all along, is that, well, let me go to all and see if there's any. Yeah, see, there's nothing here in June. Feb is too soon. What is that? That's the 155s. That's the 165. Maybe somebody's doing a diagonal. Who knows? You can buy that one and sell that one. I'm not spending $9,850 on one contract. No, $985, excuse me. It's too expensive. I mean, it's not really relative to the stock price, but I'm not going to pay that. So I guess there's the 200s. You have 174 there. But see the spread there? That's crazy. I don't like when the spreads between the bid and the ask are like that. So maybe wait and see what happens next week for the pullback. I like to play those pullbacks, which is what Jose had said. Don, I'll be right with you on that one. Let's go to Baidu. It's oversold. Got beat down. It's pulling up. And I think there is a play in this, Jose. On a short-term basis, though. And play the rebound. I like to do that. Looks like I already did some research on this. I remember doing it. I did the extensions on it, yeah. I'd like to see a little bit more confirmation here. I see the DPO's pulled up. It did hit right at the bottom of linear regression, but I have a PPS trigger after a MOBO trigger, and that's John Person's pivot study is pretty doggone strong. Usually speaking, I mean, with Baidu, it's crazy because you've got one here that pulls up, next one pulls down 2 days later, you know. I mean, generally speaking, when it's sitting atop a linear regression, you have a Persons and then a MOBO, it's going to break down. So I'd like to see a little bit more positive confirmation. If so, here's your targets. 246.70 for buying some time. The 250s, you could actually go April 240s for $1.85. That's less than 0.8%. Marches, I'd go a little bit closer to the money. The 250s, it's like I said, 250. If you're looking for a retracement, I'd probably be under 250. 230, I like that for $1.60. It's sitting at 213, 212. Yeah, either that or let's see what a $10 bull call would be on it. There you go, folks. You need $1,000 in account per contract you buy, but you only pay $232. This is a potential of $779 profit off of spending $221. That's a good deal. Okay, it's 4:51. Motley Fool says good opportunity. Okay, all right. I generally listen to those kind of guys. They're pretty strong. I think it's a good opportunity too. I think there's just some naysayers out there. You got to read through the lines when you read some of the stuff of who's writing the article. Is there bias, prejudiced? You know, they have to write articles, so they have to get paid. Two things I want to bring to your attention for shorts, and that's the solar companies, FSLR. It's a historical precedent short. 8 out of 8 years it goes down, starting around this week. And it's sitting way, way overbought. And there's also a bearish engulfing pattern, well, a bearish candle right there. You can see, you can't see it off of this here, so, well, I actually pulled it up because I went on the candlestick chart. Also, its other sister company, China Solar, TSL, is also a historical precedent to go short. 8 out of 8 years. So you guys could take a look at that. I included those. A couple more long. Dollar Tree, I think, is going to be a recipient of lower energy cost. And that's a long. And I believe Dollar Tree, yeah, earnings 225 after market. So today is the 16th, so next Wednesday, before market, I'm sorry, BMO, before market. And there is some interest in this thing, DLTR, March 80s. March 80s for $1.20. You see some big interest here. You also see short interest here, though, as well. But it's got a really nice pattern. I like this. Screaming upwards. Diversified Financial Services, the last long, DFS, with some historical precedent. FOSL, I'd stay away from. It's in the retail sector. I don't know where I got the other one from. Oh, these were earnings. Anyways, you can see from the chart that it's got a real nice run. There it is. But again, wait maybe for a pullback. Oh no, there it is. It's already started, folks. There's your crossover, MAC crossover. I like that. I like that a lot, and there's still room for it to grow. So those are some shorts. I did the calendar already. I showed you that, March, February. Talked about PPC. Okay, I'm opening up the floor. SanDisk. Don talked about SanDisk. What was the comment? SanDisk started to make a move up. AMR and April. Okay, maybe March and April. High open interest, 80 and 82.5. Let's take a look. SNDK. Hmm, 90% probability. I like that. Where is it sitting at right now? Okay. Boy, got beat down. Maybe missed earnings. So is it oversold? Yeah, missed earnings. Crawling its way back up. SanDisk is definitely not going away. They're actually a very strong company. Don was saying there's some good open interest at the 80s. We're talking about March. 80s, 2000. Yeah, there's 2200 right in here. Actually, this would be a pretty I could see already pretty inexpensive. Nah, $1.46 for 250 spread. I wouldn't do that. It has to be under $1.25 if I'm going to do it. Well, there's a decent one. Going to the 85s. Boy, look at the 95s. You got 3,000 open interest there. And I see a lot of people probably selling here, 4,900 at the 70s. They're probably pretty, you know, if you look at the chart, I'm sure it's showing a breakout. Yeah, it's showing a breakout. You got a dividend coming up. So yeah, that would be an interesting play. I'd buy some time on that. And it's going to fill that gap right there, more than likely. So, you know, a target exit price would be the low of the 9th of January, which according to this is $95.40. So you're looking at 95, you know, and that's why evidently there are some people loading up here On the Marches, 95s, you can see that. And that's pretty inexpensive for 35 cents. You're paying 0.3%. That's a nice one, Don. All right, anybody else? Talk to me, talk to me. Oh yeah, DPZ. Interesting. A lot of people, for some reason, love dominoes. Just they're in love with them. And evidently, they're making hand over fist and money. When you look at things from a seasonal perspective, they do take a run. So earnings was last week on them, Domino's, was it? Did they miss? Did they make it? Oh, no, they got earnings coming up. Oh, SanDisk. Oh, SanDisk is what it was last week. Okay, yeah, you're right, Jose. All right, 224 before market. Nice looking chart. Domino's Pizza. Oh, by the way, did you know they changed their name? Ooh, wait. Stop the press. Look at that IV rank, everybody. Here's your opportunity to sell some volatility. That's huge. That's, literally at 91% of its historical last year IV implied volatility. So be real careful about this. If you were, I'd be buying some time on this. But you could go out and sell some of that vol because all of these are way overpriced. That's what this statistic tells me. But bottom line is probability of touching right here at 100%. You could sell some of that stuff. $0.70 credit for the 105 100s. I don't know if I'd go that close. Maybe I'd sell some puts, get some credit, and I probably may do it even in March. Okay, but DPZ is definitely one to keep your eye out on. It's a historical precedent, 10 out of 10 long. Any other stocks, guys? Let's talk about more stocks. More stocks. Anything else? We're going on 5 o'clock here. Robert, you got anything? Tom, Jose, anything else? There's always the usual suspects. You should always have Gary's 11 someplace on a watch list. Priceline, Netflix, Baidu, Google, Amazon, CMG, ISRIG, Tesla, Apple, MasterCard, and Visa. Within these 11 stocks, there's a move every week because these are high volatile stocks and they can run and move. ISRIG being one of the craziest. I mean, when you look bid-ask, that spread is huge, and it's crazy how that stock moves. It just has really nice volatility. And it looks like it's about ready to pop up. There would be some potential targets to shoot for on a weekly basis. This 518 is going to be some resistance level on this rig. The thing is, you got to get it cheap. And here's people going out of this. See the 520s. There's a bunch of people loading up there. Let's see what this would cost on a $5 spread. 240. The old Earl and I system. We probably would be willing to do something like that, as long as it's under a certain, as long as you're have an opportunity to make 100% on your money. And you're never going to get the full spread, but these kind of things work real well. So write these down. Take a look at them. There's always a move, either a bull call or a bear put. Visa split coming. Okay, that's good information. What do they do? Oh, it's coming. Okay. So what would you want to do with that? Would you want to load up before? Whoa, a lot of people loading up here in June. Bunch of people selling here at the 275s. It's coming out next month, Jose. So what would you do with something like that? Boy, a lot of interest here in March. I guess there would be a run-up to the split, right? Or actually February? The split's coming in February? Oh, okay. Well, I guess you could maybe look at the end of Feb's. Well, there isn't enough open interest here for me to get excited. I guess you could play the run-up. What is the IV on this? Rank. Real low. Real low. Evidently, I did some extensions on this already. So here's some targets to shoot for. So that's definitely a possibility. Visa. 275s. Yeah, right in between the 38.2 and 50% extension. I like that. And you could even just using best choice linear regression and say, all right, what's the difference between the mid and the high? Right? Put it right in between that. And that could put you right about the 275, right? Right in between here. That's right past the mid. So that's not a bad one, Jose. I like that. I like that a lot. Okay, if there's nothing else that somebody wants me to look at, then I'm going to wrap this up. Try to keep it within an hour now. I'm going to try to keep things a little bit shorter and open up things for you guys more. So, because we got a lot of great traders here, a lot of great traders, and I love your guys' participation. So, and I really appreciate you guys sharing your information with us because we all can benefit from that. So I'll ask one more time, is there any other stocks you guys want me to take a gander at? Nope. All right, great. Thanks, guys. Have a great trading week, and I'll speak to everybody next week.